Is Trump's trade war working 6 months later?
This triggered a massive fall in the US.
Oh man. All right, start of the trade war. Bam, that's bad. Huh. We're right back to where we were. Actually a little bit higher. Huh. I guess trade war not as destructive as everybody was saying.
Stock market, but today the stock market is higher than ever,
Oh.
despite Trump threatening more and more tariffs.
Huh.
And yes, the US dollar went down by a lot since Trump started talking about tariffs, but big picture, it's really not that much lower than just a year ago. On top of that, tariffs have not caused much inflation in
Oh, yikes. Jeez, okay.
the United States. And yes, the US economy is projected to grow more slowly due to tariffs, but so far the US is likely to keep growing quite a bit faster than other major advanced economies.
Huh. Jeez. Okay. How can I spin this to make Trump look bad? All the charts are wrong. Statistics is completely not a real thing, and in fact, it's only there to confuse and obfuscate you. Yeah. That makes sense.
Like Germany, the UK, and Japan. So what was all the fuss about? And what actually happened in these last 6 months? Trump announced tariffs, paused them, increased them, got some deals done, while others keep getting delayed. In this video, we'll create some order in all of this chaos by, number one, giving you a visual overview of what actually happened.
Oh yeah,
Two,
all right.
discuss what the effects.
Okay, 6 months later, expectations inflation was supposed to go up. It stayed about the same. I guess that's relatively true. I mean, the other side of that is like inflation kind of sort of always goes up. So if it doesn't increase at, accelerating pace, then it's kind of on track, even if it did actually go up. Economic growth expectations was it would slow down, and reality is it did slow down. The dollar would go up. I don't know, but it went down. Stock market would go down. The reality is that it went up.
On the US economy are so far. Number three, discuss the effects on the US's biggest trading partners, some of whom could actually be benefiting a little bit here and there. And
Sure.
finally, number four, discuss whether or not Trump's plan to re-industrialize the United States and let foreigners pay for it is already working. So let's jump right into Trump's trade war 6 months later. This graph by
Come on, bud. Let me
jump
pop back. Come on.
into
Did you
Trump's
see it?
trade war 6 months later.
Come on, man. I know you've got an editor. 6 months later. Come on.
Later. This graph by economist Joey Politano is the best graph I could find to summarize what Trump has actually
That's
been
a
up to.
lot going on,
Tariffs
man.
are difficult to keep track of because they target different countries and different products.
Very true.
For example, Trump has put particularly high tariffs on countries like China and on products like steel and cars. But what does this actually mean for the American economy? That is what this graph is all about, as it shows the average US tariff rate based on what type of good and from whom Americans imported in 2024.
Okay.
For example, and this is just hypothetical, if 10% of all US imports were steel and aluminum, then a 50% steel and aluminum tariff would raise the average US tariff rate by 5%.
Okay, I gotcha.
So, what happened so far? This graph shows.
So this is just in general tariff rates in total. Now, obviously, the reason it had all of these annotations is because the general tariff rate, could go just a slight bump. This could have been like, all right, this is a 7,000% tariff on like Vietnam, and Vietnam provides like a small amount of stuff, and like the tariff rate is super high, but it doesn't matter. So I mean, it's kind of a weird chart. I get it. And obviously, like, with all the annotations, you can go, oh, okay, you can figure it out. I don't know if this is like a great chart. Like, visually speaking, it doesn't really tell you that much because, again, the amount of other stuff you need to keep in your head doesn't really help.
10 important milestones. After announcing impending tariffs against Mexico and Canada on his first day, Trump then hit China with a 10% tariff increase in early February. Second, he hit China, Mexico, and Canada with more tariffs early March.
Bam.
Third, he excluded goods that fell under the original US-Mexico-Canada agreement,
Right.
causing the average tariff rate to drop again. Fourth, he raised tariffs on steel and aluminum. Fifth, he introduced...
See, this is the whole thing where it's like the amount of arrows that you need to explain this chart. Like a chart should be good enough that you don't need any extra stuff. The reason you put it into a chart is because the chart speaks for itself. You know, like this is not, I don't care how good you are at reading charts. I don't care how incredibly statistically minded you are. This chart doesn't tell you anything in terms of like it actually helping you understand the state of tariffs.
Percent tariffs for most countries and 25% more for cars. Then we got to the big stuff. Number 6, this big spike here is Liberation Day with its reciprocal tariffs against everyone.
Ooh.
7, Trump then quickly paused most of these tariffs while raising tariffs by a lot against...
He couldn't have paused most of them if they only dropped by that amount. He couldn't have paused most of them. He must have only paused like a small amount of them. Yeah, he had to have, because otherwise it would have dropped all the way down. Because the full tariff rate, it would have dropped. It would have had to have dropped closer to here, closer to this, little dip before it, it jumps. It would have had to have been down here, like to over here. Like if he had actually paused most of them, it would be over here. And I hope you can see my actual.
China, meaning that the average tariff rate dropped but remained pretty high. Number 8, and Trump slapped some more car tariffs on Canada and Mexico. 9, the average tariff rate dropped by a lot after Trump paused tariffs against China. And finally, the average rate increased again when Trump announced a 25% steel and aluminum tariff in June. And that's it. So
okay, that's where we're at now.
Entire trade war, at least until early July, when I'm recording this video. He's right now threatening a bunch of new tariffs, so that's not in the chart yet, but it may be updated on Mr. Politano's website. Still, I hope it has helped to provide some clarity about how, on average, tariffs have gone up and down under Trump. That's all nice and well, but of course, it does not tell us anything about the positive or negative effects of these tariffs.
Gotcha.
On the negative side, tariffs were widely expected to wreck the US economy. But did they indeed do that? Let's dive in.
No. And I mean, this is the whole point, is that most people who are making those proclamations that, you know what, if there's this tariff thing, what's going to happen is the entire US economy is going to explode. It's going to implode. It's going to die. It's going to, it's going to wreck it. It's going to destroy it. The problem is that all of those people that are making those types of claims think that they can understand the economy. And if the economy was that understandable, if you could actually make sense of it in that manner, command economies would work. You could have super centralized, socialist, communist, state control over, all economic activity, and it would work. Those economies would function, and they would function well because you'd be able to understand the economy. And you could go, okay, we need a little bit more of this. We need a little bit less of this. We'll move stuff around. Bing, bang, boom, we're good. The thing is that that's not what happens. What happens is every single actor in the economy, every individual, is making their own decisions from their own perspective, and their own perspective is usually way better informed about, their own specific circumstances. And therefore, they're adjusting based on that. And that allows, free market economic plans to adapt very quickly and make better decisions, such that it's very difficult to really fully destroy a free market economy. You can have dips, you can have crashes, but you're able to recover. In like command economies, you can't. Like if there's a crash, it's over. You're done. It's toast. You'll never recover because they can't dig out of that hole because they don't, they can't understand what's happening. You can't make these calculations in a command economy because they're just, the problems are too large. They have to be distributed throughout the entire economy for these things to actually adapt correctly and quickly, which is what's happening.
what did 6 months of tariffs do to the US economy? Right from the start of Trump's trade war, economists have been warning about 3 possible negative effects from tariffs. Number 1, inflation. Number 2, less economic growth. And number 3, a more valuable dollar. Yes, a more valuable dollar can be positive, but it may make it more difficult to export from the US, which Trump does not like. So in this light, the Trump team mostly talked about a higher dollar as a negative side effect of tariffs. Finally, after the sky-high tariff increases on Liberation Day, investors expected US companies would make far fewer profits, meaning financial markets then lost trillions of dollars.
Gotcha.
In total, that is 4 negative effects from tariffs.
Okay.
So, which of these have held up and which did not? Let's start with inflation.
If I remember, it's like one of them actually held true. So economists have a 25% success rate at predicting super giant broad trends. I don't know about you, but I think 25% correct answers is like a failing grade. I could be wrong.
What happens if you increase tariffs by roughly 15% in a short time? You'd think the price of imports would go up dramatically, and therefore average prices of goods would at least go up by a couple of percentage points. But as you can see here, inflation has not gone up. It continued to fall. Of course, it could be that inflation would have fallen way faster if not for Trump's tariffs. However, more detailed research by The Economist on how much highly tariffed products have gone up in price also shows that the initial impact on inflation has been
Let me go back
modest.
to this chart.
Research would have
Okay. It doesn't actually give me a good thing. So is this actual inflation? No. This is the rate of inflation. This is the rate of inflation increase. Yeah. So like this is like 1%, 2%, 3%, 4%, 5%. This is the rate it's increasing year on year. It has to be. It's got to be. Because again, like I said, inflation is essentially, because we're on a fiat currency and, therefore they're always like printing more money. We've essentially got a situation where inflation is always going to happen in the US. That's just the way it is. I would love to get off of that and go back to a gold standard. That'd be fantastic. But this is where we're at. So it is, so essentially it's not falling. Inflation's not falling. It's just that the rate at which it's increasing has decreased. So it's, it's not, I don't know if you want to say it's decelerating, but it's accelerating less quickly. Let's put it that way.
Fallen way fast. Impact on inflation has been quite modest. How is that possible? In a recent blog, economist Noah Smith discusses 3 reasons. The first is that US importers bought a lot of stuff from China and other countries right before the tariffs came into effect. Therefore, importers could keep prices low up to now. The second possible reason is that tariffs are already having an effect, but that companies are absorbing the costs. This could be American companies, but there also is some evidence that Trump was partially correct when he said foreigners would pay for the tariff. That is, Professor Marcela Olarega and Sarah Santander from the University of Geneva have estimated that on the median, foreign exporters are paying 53% of US tariffs so far.
That's the majority.
Finally, it is possible that Trump's chaos has caused Americans to spend less overall, and this then would have reduced prices throughout the economy, partially canceling out increased prices on imported goods.
Okay.
This brings us to our second predicted effect, lower GDP growth, which, unlike inflation, is clearly what we're seeing. Concretely, the US economy was widely expected to grow by 2.4% in 2025, but after 6 months of Trump's trade war, most analysts now expect the US economy will only grow by about 1.5 or 1.7%.
Okay, now here's the other side of this. They say growth projections on here. That does not tell me exactly what it was, but he said earlier it was GDP growth. So the other side of GDP, the reason why people look into it is one of the factors is your population. So if Trump is deporting, let's say, I don't think it's like 1 million, but let's say it's 1 million people. Let's say he's deporting, 1 million illegal immigrants. If that's the case, your population drops. and therefore your GDP growth is also going to drop because you have less people. And therefore, it kind of looks to markets like, okay, you're going to be able to produce less because you've got less people. This is the argument that Daniel Priestley was making about, how you're financing debt in the UK. They're doing that by importing a whole bunch more people. That's making their population grow, and therefore they're able to go to their central bank and say, "Hey, we've got more people. We're growing. Our GDP is going up, so we can keep financing more debt to pay for more stuff." And that could also be a legitimate factor here in terms of the growth projections being, lower than they would be. Not necessarily just because of tariffs. Could have other factors.
So tariffs are bad for economic growth. That prediction is holding up quite well so far. In contrast, the prediction that the Trump tariffs would increase the value of the dollar is not holding up at all. Sure, the dollar did not really fall that far compared to just a year ago, but it's still interesting that it fell right after the tariffs came into effect, while it went up during...
Let's see, this is 2024. Well, it started to fall from here, 2024. This would have been probably let's say March, it dropped.
Trump's last trade war. What can explain this quite big difference? To answer that question, let's look at the two main determinants of the exchange rate.
Okay.
Trade and finance.
Yes.
First, the value of a currency is determined by trade. If a country imports more than it exports, it will need to buy foreign currency to do so. This will reduce the value of its own currency. So by reducing imports, tariffs can increase the relative value of a currency. For example, last time Trump reduced how much the US imported from China, causing the value of the dollar to increase in comparison to the renminbi. However, this time, despite falling imports compared to exports, the dollar fell. Why did this happen? This gets us to the second determinant of exchange rates: finance.
And this is the kind of the difference between these two things is the fact that you had, when Trump's first in there, 2016 to 2020, you don't have a preceding semi-financial crisis with the COVID stuff, giant, incredible inflation because you have an enormous increase in spending, all of that type of stuff. So yeah, I mean, it's not, you would not expect, if you're going to be legitimate, if you're going to look at the economy holistically, you would say, all right, if he does the exact same thing he did in 2016, it's not necessarily going to have the same effect because you're dealing with a different set of circumstances.
Let's look at an example. If I, as a European, want to invest in the New York Stock Exchange, I'll need to buy dollars with my euros to do so. So foreigners investing in America tends to increase the relative value of the dollar. Citing Trump's chaos, foreign investors, though, have increasingly been looking to invest in relatively stable places like Taiwan, Switzerland, and the euro area, rather than in the United States. If this effect was bigger than the trade effect, it could perfectly explain why the dollar dropped rather than increased this time around. This gets us to our final expected effect of the trade war. Trade wars are bad for business, so it makes sense that the US stock market collapsed after Liberation Day. However, today, US financial markets are back. How is that possible? Well, essentially, I found two explanations. The first is that Trump recently passed his so-called Big Beautiful Bill, which mostly was about massive tax cuts for wealthy Americans and corporations. This has offset some of the
richest 20% get an average $6,555 income boost in Trump tax bill. That's so small. They're the richest people in the world. They get $6,000 a year extra, maybe. That's hilarious.
The negative effects of the tariffs. The second explanation is that what some people on Wall Street have called the taco trade, where taco stands for Trump always chickens out. That is, if you look at this graph, yes, clearly average tariffs are quite high, around 17%, but that is quite a bit lower than what Trump imposed at an average of 27% or so right after Liberation Day, when the stock markets collapsed. So after 6 months, the US economy has definitely suffered, but not by as much as expected right after Liberation Day. Does that mean that Trump was right when he said that trade wars are good and easy to win? Let's evaluate that claim by first having a look.
I mean, he's kind of, yeah, like trade wars are good and easy to win. If you're, the person who's got all the cards, yeah, sure. I guess that's true. And, if you want to swing your stuff around, then it kind of makes sense to, do that to try to get a better deal. I get it. I don't know. Again, I'm like, with Trump, whenever he's talking about these types of things, you can't actually look at it as if he's making a statement of truth. He's making a statement of positioning. He's trying to say something that puts him in a good position. So it's like, yeah, like, of course, trade wars are good and they're easy to win. He doesn't necessarily actually think that. Maybe he does. But he doesn't necessarily actually think that. It's entirely possible that he's just, he's saying that for optics. He's saying that so that, people don't freak out. And he's saying it to, kind of intimidate his opponents. It's like, yeah, like, go nuts, man. Uh-huh. Oh, what? I'm sorry. You gonna try to come at me with a trade? Yeah, okay. Good. Yeah, go ahead. Go nuts.
Look at the rest of the world. What 6 months of tariffs did to the global economy. Now, of course, the world is too big to tell you about all effects Trump's trade war had on every country. Therefore, I decided to focus on the US's 5 biggest trading partners, the EU, Canada, Mexico, China, and Japan. For each of these, I have 1 to 3 surprising, sometimes even positive takeaways. But before getting into each of these, I just want to get out of the way that Trump's trade war is bad news for every major global economy for 2 reasons.
Yeah.
The first is that tariff uncertainty is making it difficult for firms to make investment decisions all around the world. What tariff rate should investors use to make their decision to build a factory somewhere? Yes, this uncertainty is hurting US growth, but it is also hurting growth everywhere else. The second reason,
which is not necessarily a bad thing for the US, because it's like, if you're looking at these things in terms of like competitiveness, how much more competitive is the US getting than other nations? If this was just hitting the US economy on its own, that was the only thing that was happening, then all of these other nations look way more attractive to invest in. But if it's hitting everybody, not necessarily equally, but if it's hitting everybody, that uncertainty means that, the US is not losing competitiveness. And if that's the case, then, with it being still like the world's superpower, it still remains that. And therefore, it's still the safest bet. So it's kind of like that instability weirdly does tend to make the US look like a better place to invest in, because it's the more, it would be reasonable to think that it would stay on top if it's already on top, just historically speaking.
The trade war is bad for other economies is that, as we've discussed, Trump was right that foreigners are indeed paying a substantial share of the tariffs. Yes, American importers technically pay the tariff, but after 6 months we have seen that many foreign firms, like, for example, Japan's car makers, have lowered their prices substantially to keep their market share in the US. This means less export revenue for these countries. So, with that obviously negative effect out of the way, let's get into some surprising ways key trade partners have responded to Trump. Starting with the biggest, the European Union. Coming into the trade war, Europe's aging economy was performing quite weakly. However, so far, Trump's trade war has benefited the continent in 3 ways. The first is that Europe's financial markets suddenly looked quite stable compared to those in the US, prompting European stocks to outperform US ones for the first time in a long time. Second, by tying the threat of tariffs to military spending, Trump has pushed Europeans to raise their defense spending.
which was a goal, which was absolutely a goal in terms of, Trump doing these things.
benefiting the European economy in the short term. And finally,
And also, I mean, I think we could easily say if you're spending more of your own money on your defense, you're more defense minded. If you've got a stronger military, then you're probably a more secure country, which is probably better for everybody.
facing trade barriers from the US, the EU realized that its most important trade barriers are actually still inside the bloc and set out to try to remove them. Of course, it is still uncertain whether or not the EU will actually do this and complete the single market, but Trump's actions are making this more likely than ever. Next, here are 3 key takeaways for the US's second biggest trade partner, Canada. First, Trump's hostility probably helped the Liberal Party to win the election.
Yeah, almost certainly that is the case. It does kind of suck, but also, I mean, I guess Canada wasn't hurting enough. If the bit of nationalism necessary to basically go, all right, the person that's going to go, you Trump bad dude, why are you talking about us? If that was it, if that was enough to overcome the years of the Trudeau Liberal Party, screwing you over, doing bad stuff to you, if that was enough to overcome it, then I guess, yeah, I guess you weren't hurting that bad. And, if that's the case, good luck to you.
Over the Conservatives that were seen to be more aligned with Trump. Second, as a major energy supplier, Canada is actively trying to adapt its energy infrastructure to be less reliant on the US. This could make Canada more resilient in the future. Finally, third, much like the EU, Trump's aggressive conduct has caused Canada to take a long, hard look at its internal trade barriers between Canadian provinces.
So this is, I mean, like the general thing that I'm hearing from this is basically the fact that Trump has done these tariffs has kind of put pressure on all of these own nations to look after their own interests. And looking after their own interests makes each of these nations much more resilient in the long term because they're being more independent. And therefore, if they've got their own interests in line, they're probably going to be more stable places to be and live and all that kind of stuff. And they can, they can look after their own selves. This does mean that, if Trump was basically trying to foster a anti-globalist surge in all other nations and places, then he probably, if that was his goal, looks like he's succeeded. Now we might not like that in terms of certain nations because we'd go, okay, well, in like a multipolar world where in which, you have like, instead of there just being a one hegemon of the world like America, there's multiple ones. So you've got like, all right, you've got a big giant sphere of influence for the US. And then you've got a big giant sphere of influence for China. You've got a big giant sphere of influence for Russia, maybe, or India. Okay. In that world, certainly, yes, the US does not dominate as much. And, every country is therefore shopping around for the best deal. They're not just like, okay, the best thing that we can do is just curry favor with the US because the US is the dominant power. And if we've got the US on our side, screw everybody else. In a world where in which there's multiple powers to compete, they each kind of have to offer the best deal. Like you can't just like, it'd be one thing if like, okay, China becomes the new hegemon. They're the new top dog. They've completely replaced the US and they're the dominant, trading partner, economic power for the world. Then things are not looking good. But if it's like, okay, China is competitive with the US, all right, well, that's something. But, then they each get to compete and each nation can kind of actually, do their own thing and decide what benefits them the most. And then if it's China and the US and India and Russia, well then hey, you've got a much greater world stage of competition here. And you're probably gonna, I mean, for me, I like that as like a libertarian. Like that it feels like a libertarian win. that we've got more competition and we've got more of an ability for everybody to look after their own interests. And, it feels like it's going to be a better deal for everybody. Um, and kind of a return to normal history as opposed to this, experiment in globalism.
Differences that the IMF has estimated are equal to about a 21% tariff internally. Again, just as with the EU, if Canada can now remove these thanks to pressure from Trump, he could have ended up doing them a major service. Interestingly, Trump's trade war could even benefit his third biggest trading partner, Mexico. Yes, the Trump trade war threatens Mexico's entire development model, where it tried to get rich by becoming a low-cost manufacturing hub for the US through its free trade deal with the US. However, so far Trump has somewhat respected that deal by only putting tariffs on goods that fall outside of the terms of the existing deal. The one upside for Mexico is that because tariffs on other nations were so low, its zero tariff free trade deal was really not that big of a benefit. However, now that US tariff rates against other countries are up by a lot, if Mexico can prevent Trump from leaving that trade deal, it may actually become the best low-cost manufacturing hub for firms that want to export to the US. Even for China, there are...
Okay, let me see what this says. Business leaders in Mexico say the incoming U.S. administration will enhance the appeal of their factories as an alternative to plants in China. That sounds kind of good. Like, again, like, who would you rather be benefiting? Would you rather Mexico be benefiting, or would you rather China be benefiting? Again, Mexico benefiting in the sense that it takes away factories and manufacturing from China and therefore kind of weakens China's position. Not bad. Not bad.
Manufacturing hub for firms that want to export to the US. Even for China, there are two bright spots. The first is that Trump's chaos is causing many countries to reconsider relying on the US too much, markedly improving China's image in the rest of the world. The second is that many experts have argued that
China calls Trump's new tariff threat a mistake upon a mistake and looks for opportunity in global trade war.
China's new trade deal with Trump does show that China has a stronger position than Trump expected. Finally, for Japan, Trump's threats may lower some of its incredibly outdated restrictions on food imports. For example, when it comes to rice, Professor Kenichi Ueda from the University of Tokyo estimates that Japan's barriers are equal to a tariff of 233% on rice.
Yikes, that's a lot.
As Trump remarked, it would actually make a lot of sense for Japan to reduce this as it is currently dealing with a major rice shortage. So while Trump's trade war has some upsides for all major trading partners, on average, Trump's trade war has damaged the global economy, putting it on a path towards multipolarity where trade wars become far more common. But according to Trump, all of this was necessary to reindustrialize the US and potentially earn the American government so much money so that it can lower taxes for ordinary Americans. So, was Trump right? When it comes to government revenue, we can see...
I think his initial idea was that the reindustrialization of America was probably not going to happen. If I remember correctly from his first video on this, was like, he was pretty skeptical, cynical that it was going to work. And I kind of do sort of agree with it. I'm not sure if it's something that really could work in, the world which we have it, the global market being what it is. I think there's definitely some industries and things that we probably should invest in, and, like just do it, even if it's like a loss for us, like we're producing it more expensively than it would in China. It's like, all right, well, we'd rather have these things produced here. We'd rather like rare earth materials be mined in the US to give, the rest of the world another trading partner for these things, rather than China being the only person you can buy these things from. It's probably not a bad idea. And if that means that we're kind of rejiggering the economy to make those things happen, and we have to, move things around such that, some people get hurt, then it's probably in the long term not a bad idea. I understand that. Although it is, again, it's very difficult to actually make stuff like that happen organically or inorganically for that matter.
In this graph by The Economist that tariffs are definitely working in the sense that they are bringing in a lot more government revenue than was the case in previous years.
Okay.
But what does that mean in the wider context? The best estimate I could find is that in 2025 tariffs will raise $189 billion for the US government.
Okay.
However, meanwhile, Trump's big, beautiful tax cuts are projected to increase the U.S. deficit by $3 trillion. So yes, tariffs are bringing in a lot of money, but not enough to make up for Trump's massive tax cuts. Okay, but then what
now,
about
I think,
not the big, beautiful $1 billion?
Let me think. So is this $189 billion a year, like this year?
For the U.S. government. However, meanwhile, Trump's big, beautiful tax cuts are projected to increase the U.S. deficit by $3 trillion. So, yes.
Okay, yeah. So, I mean, the deficit, this is because of the tax cuts. All right, so the tax cuts means that, the U.S. is taking in less tax dollars specifically because, they've cut that stuff. The tariffs are also saying, hey, look, we're projected to bring in this amount of money because of the tariffs. I don't know if the $3 trillion deficit increase is factoring in the potential for growth that the tax cuts are projected to make happen. I don't know if that's in there.
Tariffs are bringing in a lot of money, but not enough to make up for Trump's massive tax cuts.
No, yeah.
Okay, but then what about the US's reindustrialization? Trump's main goal for the trade war was to make American manufacturing great again, which could be crucial for national security. That was his point, at least.
Yeah.
Is that working? So far, the answer is we don't know for sure. But it does.
Which does make sense because those types of things, like even if we wanted to, we were like, okay, every single manufacturing company is like, okay, yeah, you know what, we definitely have to build factories in the US. It's going to take a while for those things to come online. And, they might be like, you know what, we'll just bite the bullet and wait out these 3 years for Trump to get out. And, if the Democrats get back in and we go right back to this, globalist viewpoint of manufacturing and these types of things, it would have been stupid for us to, spend all this money to get these new factories in the US up and running. So yeah, I mean, it's understandable to say like we don't know now because they could be pushing for that stuff, but they could also just be, if down the line Democrats get back in power, they could easily just be like, yeah, we're just cutting and running on this. Like we're not going to staff this factory anymore. We've got it up and running, but it's like, no, it just makes more sense for us to, leave our investment on the table. We'll ditch that and we'll go back to manufacturing everything in China.
Doesn't look like it yet. On the one hand, Trump has said that businesses practically committed $12 trillion in investments on his watch. That would be triple the number that businesses had invested in the entire last year in just the first 6 months.
Okay.
However, the problem with Trump's number is that many businesses seem to have told Trump that they will invest more thanks to him, but this included projects that they were going to be doing anyway. On the other hand, if we look at business investments in new machineries and other so-called fixed investments in the data.
All right, this is falling business confidence. So obviously there's a huge dump around COVID. Bang, falls. And then it goes up and down, up and down, up and down, up and down. So, I mean, it feels like, to be perfectly honest, it feels stable. Because, I mean, it's just so up and down. You would have to have a larger time frame to be able to actually like feel out any kind of real trend here. Because again, like if we're going to actually take this in terms of, if we're going to actually look at this in terms of averages, which is how you have to look at these charts, to me that looks like a stable line. That looks relatively stable. Maybe a tiny average decrease, maybe.
we can see that the number for Trump's first 3 months was pretty good, but the number for the months after Liberation Day are the worst since the Omicron wave of the COVID pandemic.
Yeah.
This is in line with anecdotal evidence that precisely because Trump is using tariffs as a negotiation tool, businesses of the type Trump wants to attract, factories, are not investing at all. Neither in the US nor in the rest of the world, choosing to sit out the storm. After all, yes, very high tariffs against the rest of the world does make building a factory in the US to serve the US market more attractive. But then if these tariffs can be brought down at any moment due to Trump negotiating, your US factory may all of a sudden not be competitive anymore. And because it's taken years, if not decades, to make money back on investments in a factory, it makes sense that as long as Trump is negotiating, businesses are not investing in the US. Of course, 6 months is way too short of a time frame to truly judge Trump's trade war. But hopefully this video was still useful by providing a tariff overview, review of impacts on the US, on major trading partners, and a quick review of Trump's goals. We are seeing longer-term effects more clearly. I will give you an update at that time. So subscribe to stay in the loop. And in the meantime, if you want to know more about which products are most affected by the tariffs,
All right. So essentially, the main takeaway that I've got here, let's see if we can go a little bit further. Doink, doink. Nope. All right. Essentially, the thing that I'm focusing on is the fact that economists really are not good at predicting what the economy is going to do. Like they're not really good at it. They kind of, expect certain things to happen, and then the reality doesn't fit their narrative. And like I said, I think a lot of this is just because economists can't actually, it sounds insane, but they can't predict what the economy is going to do. If they could, command economies would work. They don't, because it's too complicated and every actor is an individual and they have a better perspective on things that are happening to them and their circumstances, and therefore they change stuff up. So the idea right now is it would be better to build a factory in the US than other places because of the tariffs and these types of things. However, nobody wants to do it because they're not sure if these tariffs are going to stay in place. If, it makes sense to go ahead and do it now, do it later, or to just go, you know what, we'll lose money in the short term because, we think the Democrats are going to win down the line. And therefore, okay, we'll just basically just keep a hold of our investments. Now, at a point, that factory, that industry, that firm is going to go, all right, well, we're kind of losing money if we don't invest this into a new factory, because our old factories are, they're getting older. We're able to produce less from them. It takes more to maintain them, and they're lower technology, and therefore they're producing less. So we are actually like losing money by just relying on our older stuff. And potentially, that also raises the risk of, there being a general catastrophe in those things. And if those companies, if those factories blow up for whatever reason, we don't have anything to take the place of it. And that means that our competitors can swoop in and gobble up more of the market share and all these types of things. And these are all legitimate factors that all of these firms are weighing. And essentially, what this means is, like, right now, 6 months in, the companies are not feeling as much pressure. If, 3 years down the line, these things are still happening, even if Trump is like still negotiating on these tariffs, they basically are going to have to go, okay, unless it's like 100% in the bag Democrat victory, and the Democrats are promising to drop all of these tariffs and open, just go completely crazy with this stuff, they're basically going to have to go, all right, well, we just have to do it now. We have to invest in this stuff. And the second one company goes, all right, we're not waiting. We're just going to invest, and we're going to start building this factory. Every other company, every other firm, every other industry needs to basically follow suit. Otherwise, they're losing ground to those first adopters. So for right now, the overwhelming like feeling that I get is the tariffs do seem to be working contrary to what people were thinking. Obviously, look, there's pluses and minuses to all of these things. You have to figure out what you're willing to exchange. There's no solutions. There's only trade-offs. I'm a big believer in that. It's definitely the truth. But for right now, it seems like the trade-offs are probably going to be potentially for the best, again, for everybody. Every individual nation is now allowed to be much more of an individual, independent nation. That to me does not strike me as a bad thing. That kind of, I mean, again, from a libertarian perspective, I like that. I like that idea. And therefore, we've got a much more competitive global market as opposed to a unified globalist market. I kind of prefer that, partially because I think the US and, the Western ideals are going to win out. But I'm not sure. Let me know what you think down in the comments. Good luck in all your endeavors. Thank you very much for your time and attention. I'll say farewell for now.